Boom, boom, boom. Let me hear you say well. All right, welcome back to the 𝘾𝙤𝙣𝙣𝙚 Bitcoin and altcoin analysis and trading show. I had to move my heater at the beginning. It was making a lot of noise within my microphone. I want to start off today's live stream by showing you a nice little exercise that helps you step back from the charts, and especially if you're clicking around with your money or you feel that you might be forming a bias towards a certain direction. It's a good exercise to step back and attempt to make sure that your analysis or your feelings of the charts are aligning with reality. And it's a two-part type of thing, and it's very, very similar to the weather forecasts that I have been thank you. I heard you say wayo. Very similar to the weather forecast that I've been implementing in my last 2 or 3 Bitcoin analysis videos non-live, and that's what we'll do. And then after we check out Bitcoin and Ethereum, since really not much has changed, so I want to try to do something different in light of almost nothing's changed in the charts. Show you a little trick, a tool to use, and then I'll open things up to questions. And again, the questions I typically try to jump around to the channel members first. So even if their questions last, I'll skip to it and then I'll go back up. And that members and super chats I get first, and you can start stacking your questions now if you want. But it is a little bit more help. That does increase the chances that it gets lost. But I will try to start at the top. All right, here we go. I'm going to make myself small and let's get this done. All right, we're going to start off with a quick little exercise here. We're going to just simply step back and look at the candles, and for the large time frames, see how many days are left within that candle. Here we have, maybe I can move myself over here. Here we have the monthly candle. Clearly it's red, but how many days are left in this candle closure? It's about halfway through the month. So 16 days left, red, halfway through the month. 2 week. It's only 4 days in, actually 3.5 days in, and it's obviously red, and yeah, it's a fairly fresh candle coming in after a previous red candle. I know this is very basic, but trust me, just watch what I'm going to do. I promise you, this is so helpful, especially if you're actively clicking around with your money. Just watch what I'm getting ready to do. I promise you, you've never done what I'm about to show you. All right, and then on the weekly candle, we have a type of doji or a spinning top candle at the top of a run here, followed by a thick red, girthy one here, and then we have a third week here that is red, that is coming near a trend line on these wicks. So if you went down to lower time frames, even though you can't see this on the weekly, it's nearing the bottom of a parallel trading channel, the third week, and you have 3 days left. So right now we have a bunch of red candles, fairly deep into each of these. All right, and here on the 5-day, we have this is a pseudo gravestone. I think this counts as a gravestone. Inverted hammer gravestone, and then you have just a straight up, I don't know if you want to call this a dragonfly when it's that thin, but this is the 5-day chart. So you have two fairly, not very bullish candles at the top of a run here, followed by follow through with aggressive red candles. This 5-day has only 1.5 days left. All of these are red so far. Here we have a 2-day that finally is looking green, but it has a strong sell pressure down. So see this wick? That means, even though it's green, that means, yes, the buyers are winning the war right now on this 2-day candle, but the sellers, recently are really pushing things down. That long wick. So this 2-day candle it ends today. It ends with the daily candle. The daily is down in red, the 12 hours down in red, the 4 hours down in red, the 2 hours down in red, the 1 hours down in red, the 30 minutes down in red. Therefore, this helps you imagine from my weather forecast, it's almost, and I'm honestly not even done with the exercise, but as of now, starting with the monthly and going down and looking how much time is left, you can start to imagine or start to get a good handle on what really is the direction of price right now, and more specifically, who is winning the war between the bulls and the bears right now. That is honestly the major question. All right, let me see if I can move this like so. And this is our little weather forecast here. The micro, I mean, everything was pretty bearish. So this was the forecast yesterday, and you notice that the day before yesterday, these two were here. The short, actually, the micro time frame was about there because it was at a possible bounce point. So from one day, it went from here, and watch, this helps you see the battle between the bulls and the bears. One day, this was yesterday's, right? And that's how it moved from 2 days ago to yesterday. And the power of these two was not great enough to even budge the needle on these. It didn't even budge it. On the midterm time frames, which is the 8-hour chart through 2-day charts, so the 8-hour candles and 2-day candles, it didn't even move this. And so today, these have then gone back to, I mean, full-on bearish. They went straight back. I don't know how deep into the red these are, but I mean, it's pretty dang deep. So the pressure is way back down, way back down. And the only reason why the long-term time frame, the 5-day through the monthly candle, isn't farther in the red is because the recent 2 months in a row that were green plus a monthly closure above the monthly 10 EMA and the weekly RSI and 5-day RSIs are forming higher lows and higher highs. And there are a couple elements in here that are making this potentially the least bearish. It's a little closer to neutral, primarily because of the last monthly closure of the month of March. All right. Now, let me take this back off, but here's one more thing that really helps. And this is something that a few of my community members really enjoyed this. I guess they had a decent moment. Now, and again, I'm doing this, I'm showing you an extra tool because there's really nothing that's changed on price. It just went back to the way it was 2 days ago, right? And all of the analyses that I did on essentially Monday are still exactly the same. All right, I'm going to start back at the month. Now watch, I'm going to use one indicator. Why are you, okay, somebody asked, why are you always bearish? Well, you should be too, man. Right now, you should be bearish. And an easier way to answer that is, regardless of anything, if the weekly 10 is under the weekly 21, so you can take off price, during these moments, you should be bearish. That is just a normal rule, at least in terms of the midterm time frames. So 8-hour through 2-day charts. And honestly, you should be slightly more bearish than neutral for your 5-day through monthly charts. If the weekly 10 is under the weekly 21, the exponential moving averages, you should be bearish. Not necessarily bearish on short-term time frames because you do have tradable bounces to the upside that are super like 7, 8, 10% moves. That is a good question. And another thing is, so that's in terms of the two larger time frames. Go to the daily, take those EMAs off. If price is under the daily 10 EMA, you should be also short-term time frame bearish. I mean, it's hard to be better than neutral if price is under just the daily 10. That's why. You shouldn't be bullish. And price has been living most of its time. I mean, zoom out. You had a brief moment above here, one closure above there, but it immediately went back down. You had 1, 2, 3, 4, 5, 6, 7, 8, 9 days above here, another 2 days above there, 3, 4 days above here, 1 day above, and then you had a string of, and so I wasn't as bearish here. I maintained midterm time frame neutral, slightly bearish after that monthly closure, but I wasn't as bearish here. Why? Because price was on top of the daily 10, but throughout since November, this is early November, the 69K top, the vast majority of candles are under the daily 10. While, now I'll put back on these the weekly EMAs, while you had this cross. So while most of these candles are under just the daily 10, which makes you short-term time frame bearish, this cross happened, which makes you midterm time frame bearish. That's why you should be too. There's honestly not a lot of reason to be bullish, but that's a good question. That is honestly a good question. I really hope that answer helps. All right. I kind of interrupted my own self with the answer to that question, but that really is an important question. Why are you bearish? I really hope that, yeah, and if that didn't do it for you, go ahead and follow up with the question. But I want to show you the second half of this exercise here, since honestly nothing else has changed. All right, I'm only going to put on the RSI, and you can see up here where my cursor is. I'm going to do the same thing. I'm going to start on the monthly, the 2 week, the weekly, so on and so forth. And really, I typically like to take off the RSI, but keeping it on, I mean, right now it'll even make it slightly more bearish. All right, even though the recent monthly closures are of March above the weekly 10 is kind of good, the RSI is in a really trouble situation. So the green line itself is the RSI. The white line is actually my focus on this second part of the exercise. I just look at the slope. Is the slope down or is it up? So a positive slope or negative slope, that's all I care about. However, you can also keep on the green just to see how bearish this is. Lower high, lower high, lower high, lower low, lower low, lower low. Rejected, couldn't even get rejected from the green zone, but it's under the EMA, right? That's the monthly. So you have a negative slope on the EMA of the RSI, and you have lower lows and lower highs. That is bad. 2 week. The white line has a negative slope, so this is the moving average of the RSI itself. You have high, lower high, lower high, lower high, lower high. It's not good. And the EMA of the 2 week is getting ready to squeeze the RSI down here. That would be really bad. I mean, this works kind of like price. It's pretty similar, but regardless, the white line has a negative slope. The weekly, zoom way in, it was positive slope for a hot second for about a week and a half. 1 week, 2 weeks of positive, 1 week of neutral, and this week is now negative. It now has a negative slope. Back from January, high, lower high, lower high, lower high, lower high. Low, lower low, lower low, lower low. I mean, it's not good. Negative slope. 5 day. Zoom way in here. It now has a negative slope. However, the RSI itself, the green, it is making higher highs and higher lows. That's not technically that bad. That does give some hope. But the slope of this currently, for your current weather forecast, that is also negative. So everything's negative so far. Let's go to the 2 day. 2 day? The RSI has a tick up, but what is the exponential moving average of it? It's got a negative slope. However, in contrast to that, this is in a rising channel, higher highs, roughly higher lows. That does give a small sign of hope. But it's just hopium. It's nothing confirmed. It's nothing to get super excited about. It's one ingredient for possible bullish move up. But right now, the EMA slope of the 2 day is negative. So everything so far has been negative. Daily slope is negative. 12-hour slope is now negative, barely. It was positive, then neutral. Look, zoom way in here. Positive, positive, negative. This current tick is negative. So right now the pressure's down. Negative slope on the 12-hour. Let's go to the 8-hour. And now I can take off the RSI for sure. I don't need to look at it anymore. Slope is now negative. It was neutral, but it's negative right now. All right. 4-hour. It is positive. So things start changing. You have things start changing at the 4-hour. So everything on everything on this side that's larger than the 4-hour is down. This is where things roughly start changing. All right, now let's go to the 2-hour. Down. 1 hour. Down. 30-minute. Down. Therefore, the 4-hour is the standalone thing that has a positive slope. It is in a league of its own, and the 4-hour itself is not powerful enough to both pull things smaller than it and larger than it to the upside. Therefore, Bitcoin has a lot of work to do in order to even start considering touching the 8-hour and the 12-hour charts to try to flip them even neutral. Because first, the small time frames have to get on the side of the 4 hour. So 1 through 4 hour need to get all on the team bullish for things to turn around. And this is another reason why you should be bearish right now. The 4 hour, I mean, is the only thing that has a positive slope. And yeah, and a lot of times that's actually kind of rare where everything is in line. A lot of times you have the 1 hour through 4 hour is positive. The 8 hour and like, let's say the 8 hour is kind of neutral. It's got a neutral slope. And then the 12 hour through 5 day are all bearish. And so you have kind of like the midpoint. You could see a that's usually how it works. Where this side of the chart is doing one thing, this side of the time frames are doing another, and you know which the midpoint is. And usually, oftentimes when I do this exercise, it's either the 8 hour or the 12 hour, which is kind of your midpoint, which is why I kind of label this as midterm time frames. You see that very, very often when we do this exercise. So this exercise really is pretty darn similar to doing a weather forecast. If you don't want to, try to, do anything fancy with putting drawings on your chart and all that, you can just quickly run through this exercise. Start at the monthly, work your way down real quick, and for the larger time frames, though, you want to look how much time is left, though. If it's only 2 days into a monthly candle and it's red, you got to take that with a grain of salt, because that could easily be a backfill, which is technically could be bullish, right? Especially if you had two previous, for example, let's go to the monthly chart. If this were, if this red candle were 2 days in and it was only about here, okay, this candle right there, after 2 green candles with a strong closure above the monthly 10, okay, and you wouldn't necessarily consider that too bearish yet, especially if it had 28 days left, because a lot of times after 2 green candles you closed above important EMA, you have a backfill. So, but it's halfway through the month, so therefore the pressure is definitely down. So start with the candles, run all the way down, and then open the RSI. You could take off the, you could actually click the gear here and take off the RSI itself. Just click that. Hit the gear, click this, and take off the RSI, look at the slope. And it's a really nice exercise to make sure that, you can't see my chart. Did that last stream too. So start with the monthly here. Let me say that one more time. The after 2 green candles, if this candle here were only 2 days in, you would look over here and see it has 28 to 30 days left, or on a 31-day month or whatever, it's barely into the monthly candle, you wouldn't interpret that necessarily as bearish. However, since this monthly candle is halfway through and it's still red, I mean, you would interpret this as pressure down, right? So for the larger candles, when you run through, you want to look at how much time is left, because if it's very early in the candle after a green candle, you would keep that with a grain of salt for the potential for just being a backfill before it flips green. But you run through the candles, then you open up the RSI. Here we go. And start with the monthly, and you can click the gear up here and take off the RSI itself. So you just are looking through the slope. You go, okay, monthly down, 2 week down, and you just go like this. And what this does is, if you are actively trading, or you think you want to buy Trias, or think you want to go in on Veracity, it's a great price, all this stuff, before you hit click or buy or whatever, this is a great exercise to do to make sure that you are getting ready to go with the trend. Just because price is low is not a good signal to buy stuff, right? Because trading and / active investing is totally different from TA. It helps you put yourself a little bit more in control to make sure that you are interpreting reality correctly. Your perception aligns with reality. It's a really fantastic, and honestly, if you do it quickly, it only takes about 30 seconds to do. All right, that's what I got. Now, let me show you one more thing. I typically reserve going over traditional markets for my Discord community, but I wanted to do one quick thing for you. For any person who's not a believer in it's almost an undeniable fact that Bitcoin price is extremely correlated. Is it perfectly correlated? No. However, the correlation is a positive slope for sure. Especially this, can you see this ticker on my chart? NQ1 exclamation. That ticker right there. Right here. Bitcoin is, and honestly, the ticker SPX as well. But anyway, check this out. Watch. Anybody who doesn't believe this. And again, usually my analysis of this chart is going to be reserved for my Discord and the Cryptillion tier the community member updates. So roughly a BART shape, starting back on April 13th. Okay, rough BART shape starting on April 13th, and I'm on the 5-minute chart. Go to Bitcoin. Definite BART shape starting April 13th, exactly. Okay, 1. Lower highs started around April 14th. Yeah, started around April 14th. Lower highs, this is Bitcoin. So going from actually, let's start with NQ1. Lower highs start about April 14th. Okay, at about 0200 hours. Bitcoin. Lower highs right here started a couple hours earlier, just like 2 hours earlier than that. Or actually, technically 2.5 hours earlier. So it's within parameters. Now, zoom down to the 5-minute individual candles. This is particular to when the traditional markets open. Watch this. And again, I'm not typically going to analyze this on my YouTube videos, but watch. The market, so can you see down on the bottom of my chart, way down here, what time it is? Look at that. It says 9:35. Okay, that's Eastern time. The market's open at 9:30, right? But the not necessarily the futures chart. So this chart keeps running. I think this chart is open 23 hours, 5 days a week. Okay, and I think it closes for 1 hour around. I think it's 6 p.m. It might be 5 p.m. 5 or 6 p.m. 5 days a week. Anyway, so it's a 23/5 chart. But anyway, the non-future. So this chart is only open for a certain amount of hours a day, right? But anyway, the market open 5 minutes in at 9:35 is starting the red candle run, right? Go to Bitcoin. Started the red candle run. What time is that? 9:35. It's down to the candle, particularly with market opens. Therefore, I probably will, for YouTube analysis, I probably won't look at this a ton because I want to add extra value to the, people who are paying for other analyses. But just, for your own sake, if you're not a part of the community or YouTube tier, just make sure you're looking at this stuff, especially this ticker. I mean, the ticker right here and the ticker particularly this ticker. It's really, you need to add this to your chart. It's extremely, extremely important because Bitcoin just moves with it. If Bitcoin, has a bullish looking setup and this tanks, Bitcoin will go down with it. It will. And the time that Amazon had at 5 p.m. exactly, right when the actual, not the futures market, but the traditional market went AMZN. I mean, even a leader in Nasdaq, where was it? I can't remember when it happened. Amazon, gosh, where was it? I'm gonna probably have to go to the 4-hour. It might have been here. No, it was a bigger pump than that. Anyway, one time Bitcoin didn't have any reason to pump, and then right at 5 p.m. the futures market, the one I was actually the futures market of the whole index of Nasdaq pumped with an 18% pump in 1 second because the market's closed, and then 1 second later the market, 1 second later it made a gap, 18% up, and Bitcoin had a 5% move in a 5-minute candle because of Amazon's release, and because Amazon is like the Bitcoin of Nasdaq, it moved the entire index up as well, and the index moved about 5%, the futures index, and Bitcoin went 5% for with no sign in the charts that it was going to go up. So it's really important you watch out for this stuff. All right, so hopefully these two tools that I'm giving you I'm not necessarily giving you a full-on analysis of what's going on with the traditional markets, but I just gave you two tools: how to reality check yourself in literally 30 seconds, and then another very important tool in your bag, which both will help you, not financial advice. I'm not a financial advisor, but these two tools, hopefully can help guide you to have a more profitable crypto journey. I hope you find this useful. And again, Bitcoin price, it's not doing anything special. If you want to ask questions about it, that's fine. But I found it really important. And this is the kind of stuff we go over, in Discord, but more in depth. But I thought I would at least give you these tools. All right, here we go. Oh shit! So OTA woke up from his nap just in time for this. Great. All right. So okay, social 𝐾𝐢𝐬𝐜𝐻. Yeah. Why are you always bearish? Thoughts on K? So someone's asking about KDA. All right. Good. Well, I can get to everybody's questions since I don't have community members asking questions. So I will open things up to questions, and right as I'm doing that, I think this chart, this range right here, is working better than everything. It's just a very, very quick analysis here. Just like a stoplight, you have red zone, yellow zone, green. So red, yellow, green, like a stoplight. The yellow zone is the point of control. You just got a straight up rejection from it. Looks like it's going to come down to this line at least. Okay, so the next bounce point where it has permission to do something is technically here, especially after a rejection. Had price in this trading channel gone a little bit higher, so something like this, gotten above, what did I just do? Come on, Tim. Had it gotten above and started moving down with Nasdaq, it could have either bounced here or formed a higher low and then get back up in here, because it didn't necessarily see an exact rejection. It had it gone a little higher. But because of the timing of this, since it definitely got it, so this is actually a failure. So there are two types of resistances: a specific rejection, which is more like this. So this pump got rejected by that line because it did not go above. It went straight up to it and came back down. That's one type of resistance. This type of resistance, called a failure, goes above, then can't hold it, right? Can't hold it. But it did get slightly above, but never used it as support. That's a failure. That's a rejection. They're both types of resistance. But anyway, so I'll just loosely call that a rejection. It got rejected by this line, even though it failed the line, more specifically. And there, because of that, the next most likely bounce point is roughly 39.5. And the prospects for a higher low, it's possible that it could just form a higher low like this. Since it's in this little shape, it could be doing this in order to bust out above this line. That's possible. However, the statistical chance of that happening is lower because you got rejected from this. Therefore, the prospects of a higher low are a lot less. It's more statistically likely that it comes down to 39.5 before it tries it all over again. Much more statistic, but I would probably, if I'm trading short-term time frames, I would probably put some trend line here, and look for a potential bounce, knowing that it's statistically a little less likely than coming down. All right, so that's your short-term stuff. But really, my videos from Monday and Tuesday, from Monday, everything still applies exactly, almost the same. Nothing has changed because price is still below the weekly 10, still below the point of control. The pressure's down. Absolutely everything's the same. So I'm going to start looking at questions. Somebody asked about KDA. All right, so here we have 𝘾𝐤𝐻𝐾𝐤, ticker KDA. And you did have essentially a triangle shape here. Price looked to be bullish coming out of it. However, it got rejected by this horizontal right here, starting back from October 23rd, this area here, with previous support. And so resistance, support, resistance, resistance, resistance. And then this trend line dating back from the origin of price connects with this height here on September 20th, connects all these. This line is real. This honestly might be the most important straight line in 𝘾𝐤𝐻 all of price. You probably need this line on your chart, okay? just look at it. And I'm specifically using KuCoin for this because I think this gets price from the very beginning, right? This was like the opening. You need that line. Therefore, you had a potential for a bullish breakout, got rejected by this horizontal, and went below, okay? Went below the line, and specifically below, and used it as resistance. That's bad. Therefore, you assume in this case that price has to hit the next target down before it can get the potential for leveling out and then trying again. I wouldn't be hoping for a U-shape or a V-shaped correction, but rather you need to identify where is the next most likely area for it to bounce, and you have the bottom of the structure from October 29th. You have support, so looking for a horizontal. I would draw a box somewhere here, connecting these areas, and it's technically at the top of it. So it is finding some area here, and however, it still could want to test the bottom of this box, which is an entire 17% lower, with pressure down on Bitcoin. Therefore, I probably wouldn't get excited about this until at least on the 4-hour chart, potentially maybe even the 1-hour chart. I would go into here, and on the 1 hour, you technically do have higher lows and higher highs so far, but knowing that Bitcoin is a primary indicator for KDA, I would feel that it's at strong risk of having, if it goes below these recent lows of 531. So I'm on the 1-hour chart. If it goes below this again, the next target is probably closer to $4.65. It's going to be closer to here. However, it does have a chance to form a horizontal range somewhere here because it's technically hitting the top of the next potential bounce point. And it could, as long as Bitcoin doesn't go too much crazier below its next target of 39.5, Kadena could easily, work its way out of this mess, going something to this effect. It could. However, I would interpret this as option. So most likely scenario. Let's say I wouldn't even say most likely. Just your top 2 to 3 areas of what's going to happen most recently, knowing that Bitcoin has pressure down, is it's going to revisit this line here for a higher low at 548. That's option number 1. It goes down to the previous local lows. This is option number 2 at 535. And option number 3 is it breaks this and comes down here. And if you are, trying to find a good pickup spot, just realize that those are the 3 most likely points for a potentially good buyback. For, as long as you're assuming that you will be a seller, you're not looking to hold this for 2 years, right? I don't think this would be a good buyback if you think you're accumulating for generational wealth. I would probably hold tether and wait for a potential capitulation of the market. But shorter term, if you wanted to take a trade, these would be your 3 most likely areas to begin considering it. And once price gets there specifically, before you take action, you would want to look at both the tickers for traditional markets and Bitcoin as your primary indicators for this once it gets there, and then analyze, is this based on Bitcoin and traditional markets, is this still a probable bounce point, or are they looking, are the other 2 primary indicators, Bitcoin and traditional markets, are they looking weak at this moment? Therefore, I don't want to take action at the first line. I want to wait for the second line because the pressure's still down for the other ones. So that would be my order of operations for this asset, utilizing these 3 potential bounce points. Hopefully that was helpful for Kadena. All right. Let me look at what else folks got here. Okay, Social Zakin, who also asked, why am I always bearish? Okay, good. Yeah, actually, Social Zakin, you have some good questions. They're very general questions, but they're very good ones. And, your questions are indicating that you are here, you want to learn. So that's good. You're not just here, thinking, this guy doesn't know what he's talking about. He's bearish and I'm bullish. You actually want to know why I'm thinking. I really like the way you approach your questions. I will do the same exercise. Bitcoin over the next 2 to 3 months, with knowing that historically, this is very bad. Red below yellow is bad. I mean, just zoom out. Look. What happened here when it went back below? Capitulation. Right? I mean, it's just bad. It's just bearish, right? So all of 2018, bearish. Like, it's bad for red to be below. It essentially means bear market. That's what it means. And in 2013, he went below, had a pump above, went below again, bear market, right? Therefore, I think at least the top two most probable targets for Bitcoin over the next 2 to 3 months, if I got three guesses, 2 guesses would be lower targets, and 1 guess would either be, just maybe somewhere in the middle of the range or slightly higher. Therefore, if I had 3 guesses, similar to how I did on KDA, like your most likely, so over the next 2 to 3 months, given that you have bearish signs going on here, I would say option number 1 in 2 to 3 months, that Bitcoin is trying to hang on for dear life, maybe have a wick below, come up. It's trying to flirt with this line somewhere near about 34 to 35K. And it's trying to round out in a couple months. That would be my option number 1. Actually, I might actually extend that range. Hold on, because this macro range is down. The bottom of this chart's down at 31. So I would say a mixture of these 2 bottoms. So I'll draw the bottom here and the bottom here. I'll take these both back off so it's not layered and it doesn't look stupid. I would say option number 1, it's trying to hang on for dear life in this range, somewhere between 31 to 34 in 2 to 3 months. Option number 2, I would say it will have capitulated and is working its way out. I would say in 2 to 3 months, I don't know where it would be, but I would say in 2 to 3 months, under 30K. So sub 30K. So 30K is bigger than BTC, right? So BTC price is under 30K. I don't want to guess how long, because once it gets down there, it could get really volatile, and day through day, it could be thousands of dollars differently. So I don't want to guess an exact range, but rather in 2 to 3 months, my second guess would be under 30K. In 2 to 3 months, my third guess would be Bitcoin works its way above this area right here, essentially the middle of the range, and I would say above 43K. My third guess would be 43K is less than Bitcoin price, so Bitcoin is above 43K would be my third guess. I don't want to guess exact dollar figures, but in general, those would be my 3 guesses, and that's all the reasons why. That's a good question. All right. Bears having their way for months. Yeah, bears are having their way. But the trend is your friend. I mean, technically the daily trend and weekly trend are up, but in the context of, like monthly, and it doesn't look good. But technically it is just in a massive range. It's just a massive range, folks. That's all it's doing. Once it starts break, or you can view it as a range that is roughly horizontal as well. That's why I have 2 different, actually I have 3 different ranges. I have 1 for a local range, but I have 2 year-long ranges dating back to here. 1 is horizontal and 1 is a parallel trading channel. Yeah, it's technically just in a range. All right, anyway. So the bears, yeah, I mean, yes, for months. I mean, from here to here, pretty bearish, yeah. The majority of time spent since November is bearish, similar to how I showed prices. The majority of it has been under the daily 10 since November 9th, which was, I think, the top. Yeah, November 8th, 9th was the 69K top. All right. I was bullish, but the Miami event was probably buy the rumor, sell the news like last year. I mean, I don't know. I honestly don't interpret Miami stuff having affected Bitcoin at all. It just moved with the stock market. It had more to do with the Fed meetings and stuff. I'm telling you, it really did. And it had more to do with what's her name, Lair. I think, is it Lair or Lane? But Brannard. I can't remember her first name. This lady saying that we need to be more aggressive. We need to be more aggressive on attacking inflation. She had that just happened at roughly the same time as the Bitcoin stuff. or the Bitcoin event. It wasn't the Bitcoin event that made Bitcoin go down. It was the Fed. It was her words. Because she started speaking at 10 a.m. exactly, and that's when Bitcoin like started getting, around the event. It happened like, on to the 5-minute candle. You could time it. Yeah, it was. I really don't think it was the Bitcoin event. All right, that's just my opinion though. All right, I was bullish. For midterm holders, do you recommend? So Eric asked, for midterm holders, do you recommend to start DCA if Bitcoin goes to 35 to 37, or do you think capitulation would be within your midterm definition, so the path would be to wait? Okay, good question. So somebody in general, I'll rephrase the question just more simply. Hopefully I'm going to rephrase it correctly. If I want a DCA, should I start doing it now, or is the chance for capitulation so great that I should just not start right now? Okay, I'm going to answer that with a visual. I'm going to put on my origin lines here. And I will go to the 2-day chart so I can see most of Bitcoin price history. Starting back from the beginning of 2013. Historically, buying under the master origin line and beginning to DCA has been a fantastic idea every single time. Even here, if you DCA'd right when Bitcoin, before the capitulation, like you didn't buy the bottom, whatever, you bought here before it truly capitulated. You bought there at $7,800, and then you just, a couple days later, you were 50% down. But you started DCAing, and that chunk of your DCAing was 50% down just like a week later. But wait another 2 weeks, you're back in the green. And then you're in green for pretty much ever. Okay? So beginning to DCA, when Bitcoin is under the master origin line, it has a 100% hit rate. Can you be 50% down on that chunk? Let's say you have $10,000 waiting to put into crypto. This is not a good time to DC, to buy use all $10,000. But in terms of you said DCA, so your dollar cost averaging down, which means I'm not going to use all my available capital. Yes, honestly, regardless of whether or not capitulation is high chance or low chance, based off of this visual, if it's under the master origin line, it's a good time to begin DCAing. Now, would I DCA into Luna? That's been making all-time highs at $120, or $119.63 or whatever it got up to. Probably not. But into things that are following Bitcoin, or it could be maybe Luna is your hedge. I don't know how you interpret that, but things that have or near protocol or something. But things similar to Bitcoin or Bitcoin itself. Is this a good time to DCA? Yes, it's a good time to at least for example, potentially 10% to 20% of what you're planning to throw into crypto over a bear market. This could be, so this is not financial advice. I'm telling you what my interpretation for my DCA strategy, and you can use it. I'm not giving any call to action for you, but the way I personally interpret this with my money, I think now is honestly, I think I did, I think my analysis is good for me personally is be 25% in, at least. So yeah, I think now is a good time to DCA for me personally. You can take that information and do what you, mix that with your own stuff, not financial advice. All right, Harrison, I'm going to skip down a little bit, then I'll go back up. I got a community member asking Trias and VXV buy zones. Okay. Okay, Trias is a community coin. I'm good giving buy zones. But if you in the future you ask for sell zones, I'll probably have to renege you. Well, I guess, yeah, just on YouTube Live. All right. Still above its weekly 10. Where's the monthly? So it's stuck between its monthly and weekly 10. Okay, so zooming out, the structure is it's stuck below its monthly 10, above its weekly 10, similar to how Bitcoin was just a while ago before it fell below. Now I'll zoom in with that context of the larger time frames, and it has fallen out of this trading channel that it was in. I would try to begin being interested in Trias somewhere closer to 550. However, similar. Actually, let me start over. All right, so we're going to take a look at Trias real quick. I'm going to zoom way back out, start from the beginning, but I'll do this a little faster here. In general, price is stuck, but not in a bad way. It seems to be finding support between the monthly 10, which is white, and the weekly 10 EMA, which is red. That was how Bitcoin was postured before it tumbled down a little bit. And I think BPRO is also in a similar situation. So that's not bad. It's finding support above the weekly 10. You can give a thumbs up. However, you have a little bit of disagreement with the lower time frames. A little bit. And the question here is, will the lower time frames drag down the higher time frames? Because higher time frames using the weekly 10 as support is good. And if you go, the longer you go sideways on this red line, the weekly 10, I mean, you're giving yourself permission to fly should Bitcoin have a good move up. Now, however, take off these EMAs, Trias was in a trading channel. It has fallen out of it and used the bottom as resistance once and twice. Therefore, I would not begin being interested in trying to do a buyback for Trias until specifically it hits the bottom here, the red line, which is the weekly 10, somewhere around $5.50. But I wouldn't necessarily just pull the trigger. If I have $1,000 to spend on Trias, I wouldn't just put limit buys for $1,000 at $5.55 or $5.50. But however, what I might do is do 10 to 20% of my available, whatever I'm planning on spending. I would probably put limit buys down there for 10 to 20% of what I have. Once you see those get filled and price is down at this level, I would then look at both Bitcoin and the traditional market ticker that I gave you at the beginning of this live stream and identify, is pressure still down on Bitcoin and traditional markets? And if not, then you could consider pulling the trigger a little bit more with the rest of, the available stable position that you're willing to spend on this. However, I would not pull the full trigger right when it hits there. So therefore, that's a longer explanation when I say I would begin being interested. So when I say I begin being interested when it hits this line, is I wouldn't pull the trigger on all my money. Okay. However, a portion of it I would. Now, if Bitcoin and traditional markets are looking fairly weak there, I would probably hold off. And then I would begin being interested either when Bitcoin starts moving up or traditional markets move up. And if they don't move up and this tumbles down, then I would simply look for some type of horizontal somewhere. Let me zoom out just a little bit. It looks like this area of interest. So let me take off the EMA. Big spike down, all this area. Maybe here too. Well, somewhere. This area here, I would put a box, something like this. That's a pretty big box though, Tim. I would actually do this right here. And then if it did break down, well, you're only 10 to 20% in, and that small amount would be, so if you bought there, it'd be 12% down, right? Unless you put stops and then you're fully out again. And then I would do the same thing for this horizontal that is ranging between $4.83 down to $3.83. So roughly $4.80 to $3.80, this box. I would begin being interested. So I'm using that phrase again. I would begin being interested if Bitcoin broke this down below its weekly 10, which I'll throw back on. I would begin being interested again at 480. And I use that phrase specifically because I wouldn't just throw all my money at it there. Once it gets there, I would then go look at primary indicators of Bitcoin and traditional markets to see, their stability. If they look like they're at a bounce point or they already are bouncing and Trias has not bounced yet, I would hit the trigger pretty hard. But if not, then I would assume that it might be targeting $3.80. And that's how I would play my buybacks. So I would have 3 areas of interest: the weekly 10, 480, and 380. And once they get there, I would judge what both your primary indicators for Trias are, Bitcoin and traditional markets. And that's how I would rock and roll with that for Trias. Hopefully that was helpful. All right. So broke Oshi. Like Satoshi broke Oshi. That's hilarious. No dinero. That is probably the best username I've ever seen. Broke Oshi, no dinero. So he says no one else is comparing Nasdaq to Bitcoin. Yeah, I mean, some people are. It's just because the correlation is just it's too much there. It's just too heavy. But yeah, I try not to give that full-on analysis where I think Nasdaq is going in traditional markets for YouTube. But hopefully you see that it's a tool. Hopefully you find that useful so you can analyze it. You're using the same tools that I use on Bitcoin. I mean, all right. So no other community members are asking questions. So KNC, I have about 10 more minutes and I got to go. Oh no, that community member asked for a second one. Trias and VXV. This has failed the weekly 10 and used it as resistance twice. So it went below, went above. So that's a failure, not a rejection. And this one's a rejection of the actual candle closures of the 4 hours. So this failure, rejection, it's coming down lower. Assuming that Bitcoin pressure in traditional markets are down, I would say it really looks like it wants to hit this area right here. It looks like it's going to come down to about $2.10, $2.08. That would probably, I'm going to use this phrase very specifically again. I would begin being interested there. So if I had, $1,000 that I wanted to throw at this for a buyback, I would feel fairly safe using a small percentage of it, maybe 10, 15% to just blindly put limit buys. But for the rest of it, once it gets there, I would analyze both Bitcoin and traditional markets and determine, okay, should I pull the trigger harder? That would be my range. $2.08 to $1.95 roughly would be the next target down. It does look like it's going to head down there because of the price's interaction with this weekly 10. It technically never used it truly as support. Look, it came above. Where did it find support? Not at the weekly 10. Came above. Where did it find support? Not at the weekly 10. Not at the weekly 10. Not at the weekly 10. Again, never even actually truly got above this and used it as support. So that's why I always say in my videos, whether it's a YouTube live or not, I always say two things need to happen: get above and use as support. That's a perfect example of why I specifically say that. That rule doesn't work as perfectly to the downside where you go below and use as resistance, because there are some cases where it does just truly go way below and it doesn't use it as resistance. But on the way up, it is a very strong, it's an extremely strong likelihood. It's not 100%, but it is a very strong percentage on the way up to get above and use as support. However, when you break a big area to the downside, it is way more than 50% likely that it'll go below and use as resistance before continuing going down. It is much over 50%, but it's not as close to 100% as to the upside where you need to go above and use that support. But they're both definitely they definitely give you a trading edge though. All right, Phantom. All right, somebody every live stream on Tuesdays and Thursdays asks about Phantom, so I have a lot going on this chart. First observation is I'm on the 4-hour chart. I could even go to the daily, but I'm on the 4-hour chart. You have a series of lower highs and lower lows. Therefore, pressure is down. It's very likely going to hit some horizontal down lower, which I am seeing right at a psychological number of $1. It's probably going to wick below. I think it's extremely high probability over the next several days it hits 96 cents. It looks very, very likely, especially after all these. So I'm going to zoom in now. Just the general structure over the last couple months. Lower highs, lower lows. A lot of failures and rejections from the weekly 10. So this red line is the weekly 10 EMA. You have rejection, 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 rejection. It's going to try lower. Could it form a higher low here? It's possible. Oh, can't see that. Could it form a higher low here? It's possible, but it's not likely. Therefore, I would begin being interested for a buyback just under $1, around 95, 96 cents, because it looks like it's headed towards this this is a really important horizontal here. I mean, established from this wick high, this wick low. I mean, usually when you turn on a dime like this, even though there isn't a lot of activity on that line, but when you turn on a dime, for some reason, it is as much power as having like 10 daily candle closures at the same area. I don't know why, but for altcoins and Bitcoin, it just is. When you see a drastic, it turns on a dime, it goes exactly the opposite way at one instant. This is going to be a very powerful line. This could help Phantom. This could end up being support. However, this is kind of like your Cardano $1 line. This is your kind of your cliff. If it goes below this 95, 96 cent area, it's going to be bad, and it will probably move very quickly down to your next target of, a 45% drop down here. It would probably be pretty quick. It would probably be very quick, especially if Bitcoin is bearish and the traditional markets are going down. Therefore, right now, it looks like pressure's down. It looks like it's it looks like it's going to hit 95 cents before it can do anything special. However, I think it has a double digits percentage chance of forming a higher low here and retesting the weekly 10 before it, and just retesting the weekly 10. I'm not going to elaborate beyond that because, bit by then, Bitcoin could turn around right as it's coming up. So the first most probable is about 96 cents. Second most probable is it forms a higher low, revisits the weekly 10, and I won't make, any other... I won't elaborate beyond that, whether it would break up and out of there or whether it gets rejected and come down, because I don't know what Bitcoin and traditional markets are going to be doing by that point. But over the next 5 to 10 days, those are your two most likely points. 95 cents straight down or higher low, and then you revisit the weekly 10 somewhere around $1.40. But I think it's much more probable that Phantom over the next 10 days or even 15, so roughly 1.5 to 3 weeks or something, hits 96 cents. I think that's the most probable. Hopefully that was helpful. All right. Patrick Van Leemp says, how come 53 people watching and only 19 likes? That is a darn good question. Don't be... Here. Come on now. Don't be a total freeloader. At least hit the like button. All right. Okay. No, it's fine. The way I learned crypto and trading was I totally freeloaded the entire time. Because I actually didn't know there were paid for communities. I had no idea until I accidentally became a YouTuber and people who watched me demanded I created an online community. All right. So Crypto Cowboy, hey Crypto Cowboy, if BTC goes to 20K, how low will VRA go? That's a good question. 0.009 to 0.0075. That would be my guess. I think it would hold up at the bottom of this range. But if Bitcoin has, a 30%, let's see here, 20K. No, that would be about a 50% tumble. It'd probably wick below. Man, it might hold up here, though. It honestly might only go down as much as Bitcoin went down. I would say it would wick below. If Bitcoin went really down to 20K, I think it would wick significantly below 0.009. So I wouldn't say 0.009 because that would be on par with Bitcoin, both roughly a 45-50% drop. I would say it'd have a significant wick below it, similar to here. 0.0075 would be my first idea. However, I do have this capitulation box. If the buyers and fans of Veracity are not buying up Veracity, right, and they're just scared, they're also selling off. It really depends on this, the club of VRA. It's possible you get a strong bounce at 0.0075, but if it just, moves with Bitcoin and it has the general, it goes down, 1.5 times more than Bitcoin does, which is what typical altcoins do. If Bitcoin goes down 50%, altcoins typically go down like 65 to 70%. That would be 80. It might not hit this box. However, I think my lower end target would be 0.003. So somewhere between 0.003 and 0.0075 for when Bitcoin hits 20K would be my answer to that. All right. H-bar. Yeah, H-bar, honestly, I started looking into that. it really is a special. It's totally different than pretty much the rest of crypto. Its ambitions. This probably isn't the chart I want to be using. So the Binance chart is the best used for HBAR. All right, we're going to take a look at HBAR, ticker HBAR, Hedera hash graph here. Okay, I am going to take off all of these here. All right, let me zoom out to the daily. All right, first observation, it's been getting rejected by the weekly 10 EMA over and over and over, but not necessarily forming lower lows. It's trying to hold on for dear life at this horizontal right at 20 cents. So I would make a horizontal right at 20 cents. And if it breaks 20, so now I'm going to zoom in. I'm going to go to this area and zoom into maybe the 1 hour chart. I would make my horizontal at 20 cents. And the moment that HBAR price, and remember, two conditions. Just like in this live stream just 5 minutes ago, I was saying, it has to do this and this at the same time, right? Go above and use as support, or go below and use as resistance. The moment it goes below, comes back up, and uses that 20 cent line, or it's actually about 19 and a quarter. So that this horizontal's at 19.25, and use as resistance, and then starts heading back down. That's the point where conditions for initiating the next target down have been initiated. Okay, but it has to use it as resistance. Just going below like this doesn't mean anything, because buyers could buy it right back up. It's got to go below and use as resistance, and then the next 1 hour, whatever time frame you're on, just in general, it makes this type of shape, which might be easier to see if I use this tool. Maybe it might move something like this, and then after you use it as resistance, so this is two forms of resistance. It's a rejection, a failure, and a rejection. It might only get rejected or fail at once and then really head down. But once it goes above and goes below its original down point like this horizontal, its original point of low, that is when the next target is extremely probable to be $15.7 cents. However, until then, I think it has a strong chance of holding strong at $19.25. But what you have going on is you have an incoming squeeze play of the weekly 10 with the horizontal. So it's possible that this really tries to stay steady until the end of April, just like a lot of other altcoins. There's a lot of stuff pointing to the 1st of May, like beginning of May, where things could have a really bearish squeeze. And that is when the Fed is coming out with what they're going to do. I mean, right around May 3rd, there's a lot of stuff pointing for a potential strong down move beginning of May. It is, or late, like the last week of April, first week of May. So I think this, honestly, if I had to make one most probable guess, I think it has a chance to maybe dip below, but in general, hold on to this $9 line and then wait for whatever Bitcoin and traditional market's going to do late May, and then it's going to head down. That would be my best guess. However, general rule of thumb for HBAR, draw in your 19.25 cent line, 0.192 or so, and just in general rule, you're looking for it's going to stay steady until it goes below and uses as a resistance and starts heading back down. But until that happens, I think it's going to bounce and stay generally under its weekly 10 for the rest of this month. Hopefully that was helpful. All right. Should I really shit the price? Okay. 𝐾𝐢𝐬𝐜𝐸. So Community Harrison is asking about 𝐾𝐢𝐬𝐜𝐸. Okay, hopefully my noise gate on my microphone's working and you can't hear that chicken that just got into my my pole barn, which my office is like closed off and drywalled and all that stuff, but hopefully you can't hear a chicken. My little girls decided to try to get eggs out of the coop and they left the damn door open, so we're catching chickens yesterday. All right, okay, let's see here. This one's got a couple options. It looks like it wants to hit this horizontal, $6.40. It looks like it's going to want to test $6.40 before it decides, am I going to get back above the weekly 10? So this red line's the weekly 10, even though I'm on the daily chart. I'm using the MTF indicator, of course. I think I would first target $6.40, and then I would be, so I'm going to use that specific phrase again, I would begin being interested in looking for a buyback. But once it gets there, this very probable area that it's very likely going to hit, I would then analyze Bitcoin and traditional markets, see what's going on, and look for a potential bounce back above. And that could be, if you get there and it bounces back above, makes a lower high, hell, that's a freaking 36% potential trade. Wow. Wow, that is actually not a... Whew. Yeah, I mean, honestly, that... Wow. Yeah, I mean, I think something like this, maybe like that, and then it tries to go up one more time, make a higher low. But I would definitely be a seller somewhere around there, like a 45-degree angle from this wick high. If I caught this line, I would only want to catch it with the condition of I'm not going to hold that, for more than a couple weeks. I would be personally. So this is not financial advice. I'm not a financial advisor. For me personally, if I picked it up at $6.35, I would be looking to be a seller at a lower high area, roughly a 45-degree angle from this wick high. But that would still be a 35% trade. That'd be huge. That's a good trade if that were to work out. That's really pretty straightforward analysis. But I wouldn't just hit it hard there. I would begin being interested there. And then I would analyze my primary indicators, Bitcoin and traditional markets, to determine how heavily I hit it. All right. Andre, community member, asked for secret. Okay, so you have a series of lower highs, but even lows, so it's making a descending triangle type of pattern. And you have support of the weekly 10, broke support, came above support, came above, failed. Resistance, came above, did not use it as support. Now I'm going to zoom way in here on the hourly chart. Now it's being used as resistance. The weekly 10 is really the most important thing to be looking at on any altcoin and Bitcoin, honestly, right now. So that was almost perfect resistance. So this is going to come down. The chance of forming a higher low here it's possible, but it's not the most probable scenario. It's very likely going to make a lower local low, and it's going to hit some trend line. I think this is by far the most probable scenario. I would do it between this wick low and the wick low of January 24th and the wick low of February 23rd, somewhere like that. And I would say it's going to target between $4.60 and $4.30. It's very probable going to target that area because of its recent interactions with the weekly 10 using as resistance once, failing it once, perfect rejection twice. It's going to make a lower low. It's very, very likely headed down towards $4.60. However, it could easily go all the way down to $4.30. So I would begin being being interested at $4.60, knowing that it's very possible that it goes all the way down to $4.30. That's secret. All right. KuCoin shares. All right, I got to go after this one. Don't know what this was for. Wow, this is holding up really well. You haven't technically used the weekly 10 as resistance yet. You do have lower lows and lower highs on the small scale. Oh no, on the small scale you have, on the mid scale you have lower, but on this, so you have a battle between lower time frames and higher time frames. It looks like it wants to try to use the weekly 10 as support, but all right, this one's going to be trickier. I don't think there's a strong edge because it looks like it might want to keep riding this, but it looks like it might. If I would throw on the weekly 10, and I would probably analyze this on something like the 1 hour. If you see the 1 hour go back below here and come back up and use it as resistance, and then break below its recent low like that, I would say it's very, very likely getting ready to target the lows between the lows of February and March here, somewhere like this. If these conditions with the weekly 10 are met, it's going to come straight down here to about just under 18 bucks. 17.99 to 17.63 would be your next target. However, until this condition is met, I think this has a chance to stay going sideways on the weekly 10 until that condition is met. Once that condition is met, it'll initiate downside targets of between 17.60 and 17.95. All right. Can fit MTRG. Somebody asked an interesting question. Does MTRG have a chance to 50x if Bitcoin hits 100K? 12, so it's a small / micro cap. $600 million. Can it get up to, so you're essentially saying, can this get up to 600 million market cap if Bitcoin hits 100K? Right now, page 1, so it would actually probably be more like so another way to say this, once Bitcoin gets to 100K, all of these market caps, so this is the 200th largest coin, but if Bitcoin were to go to it's actually Moon River, one of my favorite things to look at. But anyway, so another way to rephrase your question is, so this would way more than 3x. All of these would be, so it would actually probably be page 4. Yeah, page 4 coin market cap would probably be around 6x. So can it get to page 4 coin market cap? Because these would all probably be around $500 million by that point, 100K Bitcoin. Can it be within the top 400 cryptocurrencies? Yeah, I think it's not unreasonable. I don't know much about the project, but from a market cap standpoint, it's not unreasonable. Now, XRP would not have a good chance of 50xing, even with the SEC stuff, because its market cap is too big, right? Like, it can't have a market cap as big as, like, Amazon or whatever that would be. It's just not going to happen, but it is possible. Let me look at the structure of this, and then I got to go. Well, this does... Yeah, I would say it's possible. How likely is it on a percentage basis? I don't know, because I know nothing of the fan base, how active they are, how much money they have reserved for, advertising, how far along in the project, do they have mainnet? I don't know all that. But from a strict, like the chart isn't too horrible. It looks like it's recovered. But if Bitcoin were to fly off there, the market cap does allow for that type of space. It would be not unreasonable. It'd probably be on page 4. Maybe the bottom of page 3 of CoinMarketCap. I think that is possible. It's not totally unreasonable to have that expectation. Now, is it probable? Is it more than 50% likely for that to happen? I would say probably not at this point. But is it a 0% chance? No. It might even be 10%. It might even be double digits. But it might be somewhere between 5 to 15% likely at this point. And there would be conditions, that would be met that would make it more and more probable as it kept rising up. But as of now, that would probably be my assessment of that question. That's an interesting question. I used to get those a lot when during the bull market. All right, hey everybody, Tuesdays and Thursdays, 10:30 a.m. And it's possible that I have to change those time frames in a couple weeks, but next week will be at 10:30 a.m. Both Tuesday, New York time.